Hello, welcome back to our channel. As always, before we start, let me introduce ourselves. We are a family of two documenting our journey to FIRE, financial independence, retire early. In the last video, we spoke about our top 5 ETF picks. If you didn't see that video yet, please do watch it. So let's get into the demo. First things first, let's log in to your Fidelity account. Since this is the ETF Screener by Fidelity, you would need a Fidelity account, and hence I'm going to log in. Now once you click on search now, you have to typically go down and you have to look at the ETF Screener. Click on this particular space, which is your Launch ETF Screener. And what it typically does is it takes you to a new page where you've got all these cool filters that you can play around with. So let me go ahead and click View All, because I want to look at the bigger picture and not look at one variable at a time. When you look at this particular page, you have things like your criteria. You've got your basic ETF facts, you've got your objectives, you've got your exposures. Your exposures typically would mean which country they're exposed to, what sectors they're exposed to, and is a good indicator of an ETF that you should either work with or avoid based on what the economic conditions are as in that country. You also have things like your trading characteristics, your performance, your volatility, your fundamentals, your technicals, your tax considerations, as well as your analyst ratings. I will probably try to explain all these aspects when we have an extract. So let's try to get an extract first. First, obviously you want to know about the ETFs, whether they are leveraged or not leveraged. For the purposes of this video, we're going to keep it simple. It's going to be leveraged. I'd like to learn more about the legal structure, market price, asset class, expense ratios. If you've not seen our previous video, we speak about how expense ratio is an important factor in choosing an ETF. You want this number to be as low as possible. You can definitely look at investment philosophy, definitely look at the volatility. In that case, we typically look at all the betas, your first year, 3-year betas. It gives you a great understanding of how volatile this particular ETF is. If you're into tax savings, definitely check this particular box, your distribution yield, as well as your dividend paid. At the same time, if you have specific considerations for your ETFs, you can definitely check one of these boxes. I typically like to not use this particular filter. You can look at things like your trading characteristics, if that's something that you're interested in, such as what your bid-ask spread is, what your intraday volume is. I think volume is a good indicator of how popular that ETF is, and hence you should keep an eye on this particular metric so that you can buy or sell an ETF. For example, let's say if the volume for an ETF is very low, you typically don't want to buy that ETF, because at the end of the day, this is a market, right? There are going to be buyers, there are going to be sellers. If there are no buyers in the market, whom are you going to sell it to? Hence, this is a key metric that you should take a look at. Shares outstanding, if that's something that you're interested in. Institutional ownership. If a lot of institutions own this particular ETF, you can be rest assured that it is a stable ETF, since a lot of these institutionals have some sort of stake in 401ks, and hence they typically try to have a more stable stock as opposed to a growth mindset or a growth stock. Again, you can look at your fundamentals. Again, these are ratios such as your price to earnings, your price to book, which is your book value, your price to sales. Certain companies such as Disney uses this metric and can be used as a metric to measure ETFs. Again, these are more of your valuation metrics. So if you're trying to understand whether a particular ETF is overvalued or undervalued, these are your type of ratios that you want to take a look at. Your price to cash flow, your historical earnings growth percentage, your sales growth, your cash flow growth, as well as your book value growth. Again, all of these are just mechanisms for you to make a better judgment whether this particular ETF is good or not. With all that information, what you want to also supplement it with is your analyst ratings. Now, many a times, a lot of these analysts, such as your Morningstar and FactSet, will look at these valuation metrics, such as your discounted cash flow models. Again, if you don't know about DCF analysis, don't fret. It's just a way in which companies typically look at a particular stock and try to value it based on your future cash flow. At the same time, there's also another valuation technique called as comps or comparables. What an analyst would typically do is they would look at similar sized ETFs or companies and try to match your ratios. Now, based on that, those two particular methodologies, your FactSet or your Morningstar will assign a particular rating to these ETFs. And I typically try to look at Morningstar just because that's what I've been doing in the past. I also try to look at your country exposure, your sector exposure, because in general I avoid energy at this point. Also industry exposure, because I don't want to be overweighted on, let's say, tech or in any other particular industry. You can look at all of these different aspects, such as your 52-week high, your 52-week low, but generally I don't pay too much attention to these because we are in a bull market and most of these ETFs hit regular 52 weeks high. Then again, that's not a good representation of the quality of the stock. As I mentioned, you need to look at the fundamentals, and if that's convincing enough, go ahead and buy the ETF. I also try to look at the performance, but then again, valuation or your fundamentals are super important and I'd like to stick to that. I'm going to click on apply criteria, and what I have here is all the different ETFs with the set amount of information that I've requested. So I'm going to download the results and I'm going to click on all these different factors and I'm going to click on continue. What it does is it basically creates an Excel file considering and consists of all your different ETFs present. And this is the ETF screener extract. So let's go one by one. In your search criteria, you obviously have your symbol. You have whether it's Fidelity sponsored, because Fidelity also has its own in-house ETFs. Some of them are zero commission, some of them have commissions, but more on that later. Your ETF name, your ETF type, again it's an ETF. Whether it's leveraged or not leveraged, for the purposes of this, we're going to stick to leveraged, and that's my recommendation as well. Your legal structure, whether it's an open-end investment company, whether it's a unit investment trust, if that's something that you are not aware of, that's fine. Your market price, as I mentioned, ETFs are traded on any stock exchange, and hence they have a particular market price based on demand and supply. Your asset class, as you can see, there are about 2 to 3 different types. In this case, there's fixed income and there's equity. A good example of your fixed income would be things like your bond, which typically have a lower yield but are considered to be safe investments. Equities, on the other hand, have inherent risk but have a higher reward. At the end of the day, it all comes down to reward to risk ratios. Your net expense ratio, an important consideration to take into account when purchasing an ETF. Do take a look at this particular metric before choosing the ETF, because this is the type, or this is the money that you typically pay a fund manager to manage this ETF, and you want that to be as low as possible considering these are passively managed. So for this particular instance, what I'm going to do is I'm going to just say sort from smallest to largest, just because I want to choose your low expense ratio ETFs. Your investment philosophy, as I mentioned, 99% of these are about passively managed just because they're tracking an index, right? You cannot keep changing the constituents of an index, right? Those are managed by the index themselves based on their certain profiles that they're looking for within a company. With the S&P 500, it's again based on your market cap, how big that company is. An important consideration is your volatility, betas. Now, for example, let's say a company which is highly volatile. You may want to avoid that ETF if your risk profile or your risk appetite is low. just because it will fluctuate. Hence, if you see any particular ETF with a beta of greater than 1, understand that's a high volatile ETF. I am not saying whether that's a good thing or a bad thing. It all depends on what is your risk appetite. Your distribution yield. Again, this comes down to how much money you're going to make by owning that particular ETF. Whether they paid dividends in the last 12 months. You want to make sure that the ETF that you're purchasing has a history of paying dividends. Your intraday volume. As I mentioned, volume is an important consideration, and you want to invest in an ETF which people are actively interested in, so that if you were to ever sell it, there would be buyers in the market. Your institutional ownership. This is a very important consideration before buying an ETF, because as I mentioned earlier, these behemoths have stakes in employee 401ks, and hence they typically try to invest in those ETFs that they think are high quality and are stable. The other sort of metrics that you see here are your fundamentals or your valuation metrics. The typical methodology that is followed here is your comps or your comparables, where they would typically look at what the price to earnings are for this particular ETF, and you can compare it to an equivalent S&P 500 or to any sort of similar profile ETF. That should give you an understanding whether this ETF is a good quality ETF or not. If you combine this particular valuation metrics with your expense ratios, you typically have a multi-dimensional way of looking at a particular ETF. Price to book, another valuation metric, price to sales, price to cash, as well as your historical earnings percentage. Again, these are important considerations to take into account before looking at an ETF. You can also look at your cash flow growth percentages, but for investing 101, if you've taken all these into account, you're way ahead of others. Your book value percentage and your Morningstar rating. As I mentioned, if Morningstar gives this particular ETF a 5, it means it's a high quality ETF. You can also look at the price change, but if you look at the betas, that should give you a clear understanding of what the price change is going to look like. And hence, you can make a decision to buy it or not. Your net assets are typically your AUM or your assets under management. This would give you an indication whether this is an ETF which basically tracks all the big companies, and hence you would typically see numbers like $300 billion or $400 billion, just because it's tracking these huge behemoths which have a high market cap. The other tabs, such as basic facts, you'll see a lot of repetition, so I don't want to explain that again. But definitely, if we go over this, it does give you an understanding of which benchmark ETF or which benchmark index is tracking. So if you're interested in the S&P 500, feel free to choose any ETFs based on the considerations I mentioned a couple of minutes back. Your large blend basically talks about what the style of the ETF is. Is it tracking all large cap companies? Is it tracking the mid cap companies? Is it tracking the small cap companies, or it's a blend of large and mid? Again, if you're specifically looking for large cap stocks, you may want to use this filter as well. Volume, as I mentioned, is an important characteristic and should be taken into account while deciding the ETF. Optionable. This is going to open a huge can of worms, so I'm going to let it be for this particular video. Let's go into your income characteristics. Again, you're going to see a bunch of repetitions here, but I think what's important here is to understand what your 30-day yield is, as well as what your distribution yield is. Higher the number, the better it is. For those people who are interested in knowing about the tax considerations, this could be another tab that you can look at. Now let's get into the performance and risk. Again, a lot of repetitions here, but I think what's important is to look at your year-to-date gains. What are your 1-year gains? What are your 3-year gains? What are your 5-year gains? What is the standard deviation? So again, your beta and your standard deviation are about the same, and hence you can essentially use both of them interchangeably. Technicals. Let's look at the technicals. Now, I mentioned earlier that I typically don't like to look at your 52 weeks high and your 52 week low, because in my opinion, if it's a good stock, it will definitely do well. And hence, if your valuation has been done properly with a good amount of fair value being set to it, feel free to invest in it. But for those people who typically look at it, this can be an important filter for them. Again, this particular part can get complicated. Hence, if you'd like to avoid this, that's completely okay. Your analyst opinions. Again, I did mention about your two different type of analysts, your FactSet as well as your Morningstar. Typically, I look at Morningstar. If you see a number 5 associated, it's a high quality stock. Thank you so much for watching the demo. If you made it this far, don't forget to like, comment, subscribe to our channel. In the comments, feel free to share what are some of the ETFs that you are invested in. Until next time, I'll see you then. Thank you.